Well, what a difference 1 week makes. I'll talk about it a little bit later, but David Hunter was definitely on the ropes the way things were headed. Doesn't mean he's out of the woods yet, but we'll talk about him and Peter Schiff at the end. But uh, you know, the difference between this week and last week is really quite incredible. Um, just things turned around, and the things that turned that needed to turn. The 10-year went down. The 10-year yield went down. The oil went down. The dollar went down. The VIX went down. The markets went up. So and the economic numbers help impact these things and allow the turnaround to take place. So uh, let's begin with the markets, and we'll start with the 10-year yield because that was probably the most shocking of the um, data that we have available to us. And we've been in this uptrend since what, August, the end of August, beginning of September, um, September 1st, and continuous uptrend. I was waiting for this to break. I didn't expect such a drastic drop as we saw this week. We started last week about right here, 4877, and then Powell spoke, and things went down. But there's other data that other than just Powell. But then Thursday just continued this drop in the 10-year yield. So looking forward to next week, we can expect some of the um, we'd like to see this continue down. I don't know that we'll get that dramatic a drop, but will obviously affect, tech. It will affect home sales, things of that sort, as people try to grab as low a rate as they can for right now. Um, the dollar, same thing. These last 5 days, we'll look at it weekly. We'll look at it weekly. You know, it has dropped quite precipitously, and I've got some Fibonacci things. I'm just waiting for some type of a bounce here, get down to maybe 61.8. We might get some type of bounce back into this 503.36 or something like that. Just depends. A lot of things. I've got a lot of Fibonacci scales on here. I'm just kind of monitoring to see what might happen here. So, but this is the daily data. You can see the last 2 days, but especially today, the drop in the dollar is just incredible. And obviously, this added fuel to the markets. Add on top of that, there you go. You got the oil, and we look at it for the week. There you go. See if we get below this kind of, I don't know why I drew that line. Well, some resistance there, I guess, support and resistance line associated with where it is. But we're down at 80. We get below 80, and again, these are things that'll be wind to the backs of the markets, and we broke this trend. Go back to the daily. Of course, we broke, kind of came through. It kind of went back up. Last 2 weeks ago, week and a half ago, 2 weeks ago, and once it broke through, continued on its way down, despite what's happening, in Israel, and it seems like Ukraine's like a forgotten war at this point. What else? Well, the VIX came crashing down too the last 5 days. Look at that. We were up over 20, worried about this thing going, and more volatility, more downside, all those types of things, and then boom, went straight, under 15 now. Anything under 18, really good. Kind of no man's land in here between 18 and 20. I think over 20 you're starting to get high volatility, and anything over toward usually indicates, not always, but usually indicates that there's, we start to get higher VIX rates that market's going down. But this is quite a change. Like I said, in a week, all this happened. And then we'll looking at the markets that I mentioned last 5 days. Again, you got 1, 2, 3, 4, 5. We went from about ready to fall off the earth to starting to recover. When we need to recover this 314 line, we've broken this downtrend. I still would expect some type of a pullback. Or put a Fibonacci up there. Let's see if I can recover this. Nope, it's not going to work. Okay, let's try that again. I don't know. Is it topped out? I'm not seeing much to indicate that that's the end, but you could expect coming back to 33,000-ish, here before it goes back up, or it may just continue. Might have a little pullback, maybe fill some of these gaps that we've left behind. Again, looking at it weekly, that's we don't see too many candles like that in our history. That's a lot of movement in 1 week. So that's the Dow recovering nicely. I'm going to mention the transportations because people have been talking about, and you get back to old Dow theory type of thing, and you get the transportation index was often an indicator, but back then, the railroads did everything. But you could still say airplanes and things of that sort as far as transportation goes. Again, we haven't quite recovered this downtrend that we have. Break through that. Might have a little bit of pullback first, backfill these gaps. S&P 500. You're seeing the same thing over 5, days gapping up. At least the last couple of days. Recovering some, important levels. We broke this trend. We got another one above it. But things look, like I said, what a difference a week now. It can still turn around. It doesn't necessarily mean that we're clear. Looking more at the tech side, same thing. Broke through this downtrend. Maybe this kind of wedge or banner looking thing. Broke up. Break this trend up here around 371.30, and then we're back to getting into the pursuit of that 408.54, which is the all-time high. We came up here, that seems like years ago, back in July. Thought we were there. Then boom, a correction, come back through. Still need to recover from this downtrend, but may not happen right away, or it could happen Monday. It's a little bit crazy right now. And then IWM, another one, really recovered today. I've put out the Fibonacci here in case we do have a pullback, somewhere around 100 back to 166 or so. But it may not. It's got a lot of momentum behind it right now. Might just get a small, intraday type of correction, and then move on up. And again, we're getting close to. We can start. Well, not for the IWM. The Russell's way behind. Sorry, that was my mistake. Looks like we got all-time high up here around 245, but we're only at 174. But it has a lot of room to move up, whereas the others are already kind of knocking on the door, beginning to knock on the door again of all-time highs. Breadth went up a little bit, wasn't as much as I thought, but we got to consider Apple Now let's just take a look at Apple real quick. Um, you know, didn't have a good day today. I mean, we had the same up days, and then because of their reporting, their outlook wasn't that great, so it went down. But you got to remember, it's in the Qs and the SPY, so there's a lot of other good happening to overcome what Apple did. So anyway, that's a look at the markets. The put call ratios collapsed. I mean, everything's looking pretty good. So let's go to the economic calendar and kind of see what transpired this week. Let me get on the right. All right. So this week, it started out on Monday. Dallas Manufacturing Index down more than the previous month. It's been getting destroyed anyway, but everything, the Chicago PMI, consumer confidence came out a little bit higher than expected, but relatively muted. But everything else, we had a little bit drop in the mortgage rate on Wednesday. The ISM PMI fell. These are all good signs for, it's bad for, us as people that work in manufacturing or even service industry. When we look at some of those a little bit later, but drop, it was lower, therefore expectation the Fed can start to see the weakening of the economy. JOLTS job opening came out a little bit stronger than expected. I expected a bigger reaction than that, but I think everybody was looking for, everybody knew from the Fed rate decision, interest rate decision for the Fed funds rate would stay the same. Press conference was pretty benign. Other than, to me, the highlight of it was, you may take a few years before you get down to 2%, was Powell's, the chairman of the Fed, Powell, statement basically saying, it's not going to happen next month, basically. And, there's some expectation they were really going to put the hammer down, but if they're going to be patient to get to 2%, which, by the way, it never will, we'll never see 2% again. But we've got, with the government spending the way we are, that it's not going to 2%. Unless they can really change the operational definitions of the numbers that are out there. The initial jobless claims came in higher than normal. That set off yesterday. Labor costs were actually down. Productivity was up. We had non-farm payroll that really got today started coming in at 150 when the forecast was 180, and last month 297. But I believe they revised this down. Also, the unemployment, the non-farm payrolls got reduced again. Unemployment rate clicked up to 3.9%, and this kind of set the tone for the day. PMI, S&P Services PMI came a little bit lighter than expected. I'm looking more at the U.S. rather than the global. And the services, again, came in lighter, still expanding, but just barely at 50.2. And again, anything over 50 would be expanding. Now we look at next week, and we have nothing. I don't know what else to really tell you. We got a lot of speeches, and I'm sure one of these people on the Fed will say something ridiculous, and it'll send the markets into a spin for, an hour or so. But the tone has definitely changed, at least, from Powell. I'd look at, obviously, mortgage rate. My expectation is this is probably going to be under 7.8%. I don't know, unless something changes between now and Wednesday. The Powell speech will be something that will be listened to. initial jobless claims will be something that we'll want to see happens again. Powell speaks then again on Thursday. That can change things, and then the Michigan consumer sentiment. So, there's not a lot other than the FOMC giving lots of speeches and Powell a couple times, and he may say something on Wednesday morning and then say something completely different on Thursday, or clarify something on Thursday. So, but it does sound like they're done. Never know, but especially if they're not trying to get it under 2% like in the next 6 months, then they won't continue to hammer on the economy. Powell's opening statement was, we understand how this impacts people. And no, he doesn't. It's kind of funny when people say that. Where did all my other... Well, I'll just put them back up there. All right, we had up here the Fear and Greed Index. And, it popped up. It was at 27 a week ago, and worse before then. And kind of look back at the timeline. We bottomed out here at this 18 level, and now we've made our way back up to 42. Still in fear. There's still a lot of fear in the marketplace. And then when we also look at the AAII sentiment, and there it is. Don't know what happened. And Wednesday, it's still reporting 50% bearish and 24% bullish, which is low as it's been in a while. It's the bearish high was 52.3. Haven't really even been 40%'s the best outlook we've had really in the last, obviously, few weeks. But, historical averages, we're looking at 19. People are more bearish right now. I think there's just this overhanging negative feeling about the markets at this point. I did also try to bring up the Truflation, but I don't know. Oh, it's back. Okay, it was down a little bit earlier when I was putting these up. So 2.35%, down a hundredth of a percent, much lower than what the 3.7%. I keep an eye on it. I'm curious about this deflation thing that David Hunter talks about. And that's kind of where I want to end, actually. My final comment is, for a while there, David Hunter was really on the ropes, especially when you go back and you look at these. When it broke, when the SPX broke, the S&P 500 broke the 4,200, I thought maybe this might correct more, and that would fundamentally end David Hunter's forecast, because that was a key level. Now, key levels, things change over time. So, the expectation both for David Hunter and Peter Schiff, and let's start with the end game, is this is going to end in a disaster. Peter Schiff believes we're going to go right there into the disaster, and David Hunter is calling for this huge melt up, basically, where we're going to be seeing all-time highs in all the indices. So the Dow, the S&P 500, the Qs, IWM, also metals, precious metals to explode kind of after those markets. It's been entertaining to follow him and see the comments of people. There's a huge education there. associated with how mad people get when the market was going down to the 40, below 4,200, and you know, uh, and it's going to do what it's going to do, but it found a base here, at least for the moment, and this could all get ugly. Again, could come up here and hit this downtrend. On the S&P 500 of 43.58. But I think the expectation is that from Peter Schiff standpoint is oil go up. David Hunter's expecting to go down. So if we look at that number, we obviously went down this week and broke this uptrend. So he's looking pretty good there. But again, things could change. It might bottom out here at 77 and make its way back up. I think it's going to go down to the 200 at least. That would be somewhere around in this area, the 200, or this little base that it's built here back in August. Before we might get another pop up. So Peter Schiff's expecting oil to continue up, David Hunter down. Peter Schiff's expecting the yield on the 10-year to continue up. David Hunter's expecting to come down, and this week David Hunter wins the week. So looking at the 10-year. So it's going to be interesting to watch, and I just want people to keep in mind that both of them have very negative views. Peter Schiff comes from the Austrian school. I would say, I've never asked David Hunter, but monetarist maybe. Nobody, as far as economists go, or people taking sides in economists. He's definitely not I wouldn't consider him a Keynesian. He'd be more of a Milton Friedman type of follower. It's very interesting to watch, as the markets go up and down. So, and he gets hit for not having a time frame, and he's always been a little bit off, but I have to agree with him on, for such a big cycle call that he's calling, the end of a 40-year bull run, he's, that's, you're dropping a nuclear bomb as opposed to a grenade. So there's going to be a wider target as far as the time frame for it. And, will it happen the whole next year? I hope not. I'd rather get this thing over with as far as the melt up and and the bust and all the things that David Hunter talks about. But, if you want it to really go fast, there won't be a melt up, and that's Peter Schiff's shtick for that. So, despite all the things that are happening in the world and everything, a week made a huge difference. Now, we may be sitting here next week and looking at, another turn. That's just the way things work in these particular markets. So that's what I wanted to cover this week. And remember, there is always a better way.